Welcome everyone to today's CFOLC's special presentation, The Blame Game, Are Duplicate Payments Fraud's Fault or AP Processing? Presented by our sponsor, Tipalti. Thank you, Tipalti. My name is Angela Tice. I'm the National Membership Chair and Northeast Regional Director, and I'll be facilitating today's session. So I want to just do a little bit of housekeeping before we actually get started. You might have noticed that your lines are muted, and that's just so that there are no distractions. We certainly encourage your questions and comments for today's discussion. So please feel free to type your question in the questions area, and I will ask those questions on your behalf. I'll be monitoring that area so that we can address your concerns. What we'll do today is we will not interrupt our speakers as we go along. I will collect those questions and make sure to ask them at the end of the presentation. So please make sure that if you have a question or whatever, we do want to answer those for you. That's one of the reasons that you're on the call today. So please put them in there and we will make sure to get to that. If you're a member of the CFO Leadership Council, you will receive one CPE for today's webcast. Now, to receive credit, you must be a current member and you need to answer 3 of the 4 polling questions asked. So we're going to interrupt the discussion to actually bring those to you and give you a chance to answer. In order to answer the polling questions effectively, you must be logged into today's session. So if you've dialed in and you want to receive CPE, you need to hang up and use the direct link that was provided to you at registration. In other words, you need to be on a computer in order to answer the polling questions effectively. Due to the current coronavirus crisis and all that's going on, the CFOLC has pivoted to help support our community, moving all of our live events online. And we really hope that you'll take advantage and continue to connect with us. There's a full list of online programs listed on our website, and CPEs are offered for current CFOLC members. We want to keep our friends and members connected through this time. So if you're wondering how to become a member of the CFOLC, you can certainly connect with me after the webcast. We do have different levels of involvement, and membership does start the day that you join. The cool thing about that is if you actually join today and you want CPE, you'll actually get CPE for today's session. For qualified guests in the audience today, we realize that this is one of the most challenging times on record for the CFO community. And we really want to help you in the best way we can by keeping you connected with your peers and getting the answers that you need fast. So we're making our online members-only forum, CFO Connect, available to you during this COVID-19 crisis. So for a limited time, we do let you join now, and you'll have access until August 1st, 2020. And I do hope you take advantage of it. I cannot tell you how much activity there is on a daily basis, and you really do get answers, and hopefully you'll give some as well. And again, any questions about that, please don't hesitate to reach out to me. I'm happy to answer any questions for you. That's really it for the housekeeping. Now it's my pleasure to introduce our speakers. Chris Doxey is the president of Doxey Inc., and Chris has been the owner and president of Doxey since 2012. She provides management consulting services to clients such as NACHA, Oracle, and MasterCard. She advises her clients on how to implement leading-edge best practices and automation in the areas of internal controls, risk management, and metrics for financial operations. She specializes in the procure-to-pay, order-to-cash, and record-to-report processes. And joining her today is Derek Chang, who is the Senior Director Corporate Marketing at Tipalti. And when he comes on and adds things, I'm sure he's going to say a little bit about himself as well. So for the two of you, I just want to say thank you so much for coming today and sharing your expertise and your experience with our members. And with that, Chris, I'm going to hand it to you.
Okay, thank you so much. And hello, everyone. I hope you're all doing well. And I think this is a very timely presentation, particularly for today's very, very, very crazy times. We're going to be talking about duplicate payments and who's to blame. Is it processing, or is it fraud? And unfortunately, the fraudsters know to take advantage of bad situations, and they're the ones that could be the culprit in some of the examples that we'll be talking about. I'd like to thank Tipalti for the opportunity to work with him again on this webinar. And here's just a little bit more about me. You can read at your leisure. And we've already introduced Derek. And Derek, thank you. Hope you're doing well. Glad to be working with you again on this webinar. And if we jump right into this agenda for all this material we have today, we're going to be talking about the challenges of the AP process and where are the pain points. And I remember when I was first asked to work in accounts payable back in my days at Compaq, which of course became Hewlett Packard, I was thinking, wow, that's something I certainly don't want to do. But it turned out to be a very exciting opportunity and became the focus of my career and certainly the later years of my career. But if we talk about the pain points, we know that a lot of those are coming from a manual process. And we'll get into the specifics on what can actually go wrong in a manual process. Talk about the top 10 causes of duplicate payments, how to actually prevent a duplicate payment, and of course, one of the big areas that we consider for prevention is AP automation. But of course, we'll always need to take a look at what we can do to improve our internal controls and certainly take a look at continuous monitoring. I've got a case study for you, and as mentioned, we'll have time for a Q&A. We'll be collecting your questions throughout the webinar and hopefully get to everybody at the end. Okay, the AP process. So what I'd like to do is find out what your challenges are. What's the most tedious component of your AP process? And this is a polling question that's going to be launched.
And I just did that now, Chris, so everyone will quickly answer that polling question, and then I can read you out those results.
Okay.
We'll just give them a few seconds to answer that, and then I'll share that with you.
Okay, perfect. Yeah, so the choices are invoice coding, getting your invoices approved, matching invoices to POs, getting payments approved, and setting up a payment run.
Great, and now I'm going to close that and I'll share those actually with everyone so everyone can see what everyone answered. So 46% said invoice coding, 33% said getting invoices approved, 13% matching invoices to corresponding purchase order, 4% getting payments approved, and 5% setting up a payment run.
Okay, good. Thanks for that.
You're welcome.
All right, so what are the pain points that we typically see in accounts payable? And this kind of fits in with the answers to your polling questions, or your first polling question. The first one is the manual approval workflow. Passing that paper around, trying to make sure the right person's approved it, the amounts are correct, and also some payment challenges. And those could cause early, late payments, and duplicate payment issues, which is the subject of our discussion today. And it's interesting, some suppliers are paid early, and we certainly want to make sure that we look at our processes and practices for why that can happen. Missed early payment supplier discounts. So we're paying them early, but we're not taking a discount. Limited process control. We don't have control of our process. Too many cooks are in the kitchen. It could be a siloed process. Systems are manual and disconnected. Could be a lack of visibility, and that can create an environment of risk and fraud. Lengthy reconciliations and payment cycles. Suppliers also have a lack of visibility to the payment status. Can't forget our suppliers. So they're calling accounts payable continuously if there's not a supplier portal or mechanism for them to be able to view the payment status. So accounts payable was always answering questions. Where's my invoice? Has it been paid? And maybe it's been paid incorrectly. Number 8 is the ability to establish a stronger linkage with procurement. We talk about procure to pay, and we'll get into that in a little bit more detail. But when we talk about silos and disconnects, there's very often a situation where procurement and accounts payable are at odds. They're just not talking. And we don't think about an end-to-end process. We think about it in terms of separate processes. The impact of automation. Sometimes we automate, but we don't really look at how that's impacting the entire accounts payable cycle, and it's impacting the AP process. That's why we start thinking about things, as you see throughout this webinar, in terms of connecting the dots. And one of my favorites is the manual accrual process causing delays on the financial close. Particularly if we're getting in manual invoices, we're probably going to end up with a whole bunch of accruals at the end of the month because we're not capturing those during the right time period. So those are maybe 10 pain points that are the most common. I'm sure there's a bunch of others, but those are the top ones. I mentioned the procure-to-pay process, and I do a lot of work in internal controls. And one thing I found is you can't look at accounts payable in a vacuum. Got to look at how procurement and receiving actually impact AP. So this is a somewhat of a complicated flow chart, but the point is to show how procurement and accounts payable connect together. And this chart actually takes you through supplier selection and management, right through reporting and analytics. AP also includes the procurement card or P card process, and usually T&E, and of course invoice processing, supplier master, and payment process, all the accounting processes that we mentioned. And then we talked about suppliers, but accounts payable could have other customers as well. And we also think that procurement could actually be considered a customer of accounts payable. And of course, in a shared service situation, if AP is part of a shared service, there are some customers and metrics and performance KPIs that need to be considered. The foundation for this process is internal controls and compliance, and ERP systems, hopefully an integrated systems, and of course P2P automation solutions that we'll talk a little bit about as we go through the material. Okay, if we think about what is the vision of the procure-to-pay process, it's looking at decreasing cost by implementing best practices, of course reducing risk and fraud, obtaining additional discounts, making sure that our payments are accurate, and also get rid of those manual payments by implementing ACH and other electronic payment mechanisms like P-card. Look at automating invoicing and POs, streamline that approval process. How can we streamline workflow? And streamline and mitigate internal controls or improve internal controls to mitigate risk. And one of the big challenges that we have a slide on in the next couple minutes is how do we improve the supplier master controls? Is my philosophy is if you get the supplier information right, invoicing is going to be correct, and of course payment is going to be correct. You'll see less issues with data and more accurate payments and the alleviation of duplicate payments. Look at best practices for procurement and payment, improve the cycle data accuracy, and of course take a look at how we can address strategic sourcing. So some of the drivers of these visions and goals are good metrics, and of course the visibility that you would get by metrics, and of course looking at continuous improvement pretty much across the board in the areas of metrics, payments, and of course internal controls. And here's the information I was looking at. We want to make sure that the information in the supplier master, how we're setting up a vendor or supplier, is certainly correct. And that can happen by the right controls, validation, compliance, using supplier data standards, alleviating the problem with multiple suppliers, putting in our suppliers in the supplier master more than once. Many companies are utilizing trade directories, which is where you can actually use a third-party trade directory to get validated supplier information. It's already been screened against OFAC, Office of Foreign Asset Controls, and in some cases it's even been screened with FCPA compliance as well. So that drives the invoice process, making sure that invoice automation is considered with accuracy and validation, resulting in strong, solid payment processes, payment authorization and automation, accuracy, validation, and making sure that fraud and risk are mitigated. And the foundation for that process, if we think about the general corporate controls that actually fit in to the P2P process and many other processes, look at segregation of duties. Are those causing some problems within P2P and AP? System access, which is actually going to be one of our case studies, and of course, delegation of authority. How can we look at automating approvals and certainly consider looking at workflow from end to end? So as we've started to talk about pain points and we've looked at the end-to-end process, we have our next polling question. And that question is, what components within the AP process have the most risk?
I've launched it now, so they're answering as you were just reading.
Okay, good.
Yep, and once again, we'll just give them a couple of seconds or two, and we'll get their answers, and I'll share that with you.
Okay.
And again, audience, just make sure that you're using the polling answer, and if you're having any issue, I know I've responded to some of you. If there's a problem with answering it there, please answer it in the questions area, and I will make sure that you get your credit. If you are a member of the CFO Leadership Council, you do get credit for today. You can answer it anyway, just to give us some information. Please feel free. Okay, I'm going to close and share that with everyone. So Chris, the answers are 18% said supplier master, 30% said invoice processing, 22% the P card process, and 31% payments. Back to you.
Okay, thank you very much.
You're welcome.
Yeah, so it looks like we've got some risk within payments and invoice processing. And yeah, so I bet you you'll get some information today on how to reduce risk, particularly in the invoice processing and payment area. Here's a busy slide, and I think it's actually almost a simpler look at what most manual AP processes look like. And if you think about it, we receive a paper invoice, we enter the data. So that's where somebody's touching it. You know, somebody's opening the mail, putting an invoice in, somebody's coding that invoice with a GL codes, and managing approvals in multiple systems, certainly POs, invoices, and it could certainly cause a problem, particularly if your approval process is manual. Verify code and approvals, make sure everything is approved properly according to signature authorities, queue up the payment, set up a payment run as we talked about earlier, modify a payment report if necessary, authorize the payment release, process payments separately depending upon the type, send payment notifications to vendors, and that's usually done sometimes by Pony Express mail or even in some cases email, which is certainly better than sending it in the actual U.S. mail. Then we report in the accounting system and file invoices, and we reconcile individual bank and card accounts if we have separate corporate cards and P cards. I once worked with a client, and we were actually looking at a duplicate payment audit, and they were thrilled that they had an entire file room full of invoices. Everything was very nicely filed. Things were scanned into their ERP system. However, they still kept all that paper. And again, they were just so proud that everything was organized, but it took almost an entire room to keep all that paper and intact. If we think about the red flags, what is some of the indicators of a bad process with an AP or a duplicate payment, or what can cause a duplicate payment? And basically what we're talking about here is what could be an indicator of fraud. So if we look at the general red flags, if somebody in procurement or purchasing is buying too much of an item or buying inappropriate items, now hopefully we'd see that also on our cost center reports that are being reviewed. We'd see budget variance and forecast variance, continued acceptance of low quality or non-compliant goods or services, invoice goods or services that can't be found in inventory, no receiving report for invoice goods or services, questionable or purchase order for invoice goods or services, and then we have some matching problems. Invoices aren't matching contracts, purchase orders, receiving records, or certainly inventory or usage records. And of course, major discrepancies are resulting, and total payments to suppliers are exceeding the PO or contract amounts. And we also have some cases that I've seen where employees are actually posing as suppliers, and invoice goods or services can't be located or verified, and a supplier address could actually be a mail drop. If we look at duplicate invoices, and we've got a whole example of where you can actually find some of those root causes for duplicates. And some of the most common reasons for duplicates are invoices are sent in from the same or related supplier for the same or similar goods or services for the same description of goods or services, and could be a duplicate that has the same amount, invoice number, and PO number. Other examples of red flags include, as we mentioned, segregation of duties. And I've actually seen this situation, and you'll see it actually in the case study, where the same employee can set up a supplier order from that supplier, receive and approve payments for goods or services. And to take it a step further, with really poor segregation of duties, that same employee might be able to cover their tracks with a void or journal entry. With delegation of authority, there could be a situation where purchases are split to avoid additional signatures. So if an individual has a signature authority, say up to 5,000, and the purchases for 10,000, well, they split it maybe into 2 or 3 different POs, hiding a rogue or out of policy purchase. So these are some of the examples of general and specific red flags for the AP process. And if we get into some of the reasons for duplicates, if we talk about, well, what's really the impact? And I can show you tons of fraud statistics from the ACFE and other organizations, but that's going to tell you, again, that we've got fraud across the world, and it's in different areas. It's in financial statement fraud, it's in procurement, it's in accounts payable. But if we start to look at, well, what's really the issue with duplicate payments? And Concur actually did a study a couple of years ago, and a typical small to medium business processes approximately 450 invoices in a busy month, probably, give or take a little bit more, a little bit less, and experiences an invoice duplication rate of 1.30%. And that could be about 6 duplicate invoices monthly. So you think about that, and then you start looking at what's the average value of a duplicated invoice. And I've seen this pretty much across the board, and with my work in this area, the average value is about $2,000, and that amounts to a total potential outlay of $12,000 per month if each duplicate invoice were to be paid in error. So if you don't stop those duplicate invoices coming in, if you have some tools in place to prevent those from being paid, that's the outlay that could be going out the door, which means that somebody in accounts payable or in finance has to make an effort to collect that money back from a supplier, or also use a third party to help you out with that, which many companies do. All right, so if we look at preventing duplicate payments in the invoice processing area, and this is broken up into a couple of the key areas within accounts payable, and we'll start with invoice processing. One of the top ones is that invoices are paid in multiple systems. And Could be there are multiple ERP systems, multiple instances, or AP locations. An invoice could be processed and paid twice. I actually once worked with a client that had two separate accounts payable departments, and they had controls in place when payments were made to make sure that this didn't happen. But the fact of the matter is that they needed additional controls and additional checks and balances, but the risks were there for having the invoice paid twice across the board. And what we would do to actually prevent and improve the process is perform a duplicate check. And actually, many companies are using a process where they're either running the functionality within an ERP system, and they could be using a third-party tool to actually check for duplicates. The invoice could be paid in the wrong currency. The invoice was paid to a company subsidiary and a currency rather than USD, creating a duplicate payment situation. And what we recommend is make sure that accounting rules are in place for intercompany and trade payables, and that those are reviewed in a timely manner. Now what is really going to help everything we're talking about is to have some sort of self-assessment process, include with your internal controls, where you're checking for duplicates, you're checking for currency and intercompany, a supplier invoice error. And what happens is a supplier actually does business under multiple names and sent invoices under both names, and both invoices were actually paid. Now, what helps out here is to have, again, remember your supplier master should be clean, but how do you keep it clean and true and have the supplier master be accurate is to have some sort of supplier naming convention so that you're not actually setting up a supplier more than once. You have standards where you're either using abbreviations standardly, and you actually might be using state abbreviations, street could be spelled out. As long as you're consistent, you really avoid setting up those suppliers more than once. And as far as updating to the supplier master, alert your procurement department to ensure that any changes to supplier names or DBA impacts are noted and reviewed for potential contract and purchase order impact. Now, it depends on who's setting up your supplier, and it could be a combination of procurement as well as AP. But at the end of the day, there's got to be an ultimate owner of that supplier master, and there should be ongoing checks and balances to make sure that segregation of duties are in place and that the data is reviewed on an ongoing basis. We talked about supplier information coding. There's also invoice coding, and this is one of the most common causes of a duplicate invoices. And suppliers, do this intentionally or unintentionally. They could key an additional letter or number after or before an invoice, and also keying a 0 as an O or as a 1 as an I, or a accidental transposition. That can lead to a duplicate payment, and the ERP system and controls that you have in place might not catch it. So having invoice coding rules, and that's to have a set of standardized coding rules for all your invoices coming in. And these rules can actually address the handling of leading zeros, spaces, dashes, special characters, and invoices without true numbers, etc. Now, again, what's going to actually prevent this from happening? Well, an electronic invoice is certainly going to avoid having someone key it in and possibly have these kinds of coding errors. So that would be another way to mitigate this particular problem. If we continue on with invoice processing, coding the invoice to an incorrect supplier. And what happens here is the same invoice amount and number are paid to a different supplier. And this is actually going to fit in under the suggestion to have standard invoice coding rules. And it has to do a lot with training as well. And of course, automated and electronic invoicing would help to prevent this from happening. And here we're recommending training the team on the importance of coding invoices to the correct supplier rather than just trying to get the work done for that day and kind of be a little sloppy with paying to the wrong supplier. And that's really showing the team what can happen if they're not processing the invoice to the right supplier. And you can have things like performance metrics and actually have the invoice processing team be part of a continuous improvement effort. Number 6 is inconsistent invoice amounts. And this is going to be the difference in the amount that was entered for payment versus the amount of the actual invoice. And what we suggest is have a business rule or policy that there are no manual adjustments to invoices, and make sure that those are understood and reinforced. Sometimes you can allow a tolerance, but that would be established again by you and your finance team. But there should be really no manual adjustments, particularly for any significant amount. Now, again, I worked with a client that just paid whatever the supplier sent in, particularly if it was lower than the pricing was lower than the PO. And if anything was significantly higher, that invoice was sent back. So again, there are business rules that best fit the situation, so you're not putting your company at risk. Offsetting credit with the same numeric amount. Sometimes your team or the accounts payable team may pay a credit memo actually as an invoice. They don't understand that it's actually a credit memo. And what helps this, of course, is an automated process. But looking really quickly, they say, oh, it's a credit, but it's an invoice, but it's not a credit memo. And the way to actually address this besides automation is take a look at open debit and credit balances and review those balances, particularly on a monthly basis. And this is a real good control to put in your ongoing self-assessment process. Seen it happen for lots of money. Next, we're going to look at procurement cards. And this gets a little complicated, but it is one of the reasons for a duplicate payment. Even though a supplier has been paid with a payment or procurement card, they still decide, okay, I'm going to send an invoice in just to make sure that we have sent an invoice. We send an invoice for everything, even if we've already been paid. And this is going to result in a duplicate payment. So what we do is certainly conduct an annual comparison of AP disbursements against P-card payments. And your P-card provider or your bank can actually deliver the payment data to you, and either your team or a third party can assist with a review. And what's really also important to note is we talked about software and solutions, and sometimes there are subscription fees and plans to identify duplicates between invoices and P-card disbursements. But I think a lot of that can be prevented by actually setting up these controls now and rather avoid collecting a duplicate payment after the fact. But I think having a good, solid P-card administrator and watching your invoices as they're coming in are certainly the best way to go. And the chart below is just showing the connection between the supplier master, invoice process, and payment. Now we're going to actually talk about a couple more helpful hints. And usually if you take a look at duplicate payments and the data, you can actually find that one of the root causes for duplicate payments is going to be a duplicate supplier. So mentioning that connectivity between the supplier master, of course, invoice and payment is key. Avoid having a duplicate supplier, and certainly watch a payment that could be made, again, via P-card and also invoice, Sometimes I've seen T&E payments be made to a hotel directly from the cardholder, and then the hotel may send an invoice in directly. So it's key to make sure you've got administrators for your P-card program and also T&E, and certainly automation for T&E, and any type of automation for accounts payable will certainly alleviate some of the problems we're talking about. And what really happens with automation is we've got less people handling those invoices. So we gave you some ideas on how to prevent a duplicate payment, but we're going to get into a few more suggestions. And we have our next polling question before we get into some of that detail. And the polling question is, why should the AP process be automated?
Perfect. And I just launched that, so we'll wait for everyone to give their answers, and then I will share those answers with you. Just a couple more seconds. After you've just gone through all of those points that you've gone through, it'll be interesting to see what they say, Chris.
Yeah, that's what I'm looking forward to.
All right. Okay, I'm going to close that now, and I'm going to share that with everyone. So 1% said to avoid duplicate payments, 7% to improve cost, compliance, and controls, 7% to reduce risk, and 85% said all of the above. Are they listening?
Yes, I think so. Thank you very much for that. And I'm pleased to see that, yep, we would automate to obviously avoid duplicates, improve cost, compliance, and controls, the 3 C's, reduce risk, and certainly all of the above is the answer I think we're all looking for. Okay, we're going to get into a bit of an automation roadmap. And needless to say, I've been involved in quite a few automation projects. And I'm sure you've heard this, but if you don't really have a good, solid understanding of your process, or if the process is somewhat cumbersome and a little messy, quote unquote, you might end up automating what you don't expect. And my friends at Tibalti as well as Gobi, we talk about step 1, which is taking stock of where you are and making sure that you document your AP department's primary approval and exceptions workflow, and be sure to capture unique workflows for different types of invoices, suppliers, and business units. Document the challenges resulting from the workflows, and then you take a look at where are the issues, what's the root cause. Qualify issues and quantify issues such as lost invoice, duplicate copies, manual data entry, matching errors and other invoice exceptions, supplier inquiries and escalations, duplicate payments, late payments, and lost discounts. And understanding where some of your problems are will really help you figure out where should I automate and when should I automate. The second step is taking stock of where you stand to gather baseline informational operational data, including what's your invoice volume. Well, maybe if you're a small company and you've got less than 300 invoices a year, it may not be sensible and a good cost-effective projects to actually automate anything that has low volume. Understand the number of your full-time equivalents, and don't forget the temps that you might bring in from time to time. And also consider the average value of compensation and benefits per FTE, your full-time equivalent. Now, many companies look at just salary only and don't consider that, well, gee, we've got to pay comp and benefits as well. Take a look at the total AP cost and any allocations and overhead. And if you're allocating to accounts payable with any system or facilities or corporate functional costs, that should be considered as well. Look at your cost per invoice and that would be the total AP cost actually divided by the annual invoice volume. And this is actually going to help build the business case for automation. The third step is take stock of where you stand to compare your baseline with other industry benchmarks. And some of the benchmarks that are available to take a look at: cost per invoice, cycle time for purchase order-based invoices, cycle time for non-purchase order-based invoices, invoice process per FTE per month, your rate of duplicate invoices. If you have a tremendous amount of duplicates, something to consider: supplier inquiries per 1,000 invoices, overall first pass match rate, how many invoices are coming in correct, and early payment discounts captured as a percentage of spend. And last but not least, to get a real feel for where you stand and maybe what you can correct internally before looking at a full-blown automation project, you can begin to create a list of processes that can be transformed through automation. And the processes to take a look at are receiving invoices, extracting data from invoices, matching invoices to purchase orders, invoice approval workflows, invoice exception workflows. What do your exceptions look like? Supplier account reconciliation and query resolution, reporting, and analytics. And once you know where you stand, you can start thinking about, okay, what does it make sense to automate? And again, many companies just jump right in with both feet and don't really have a good feeling for what can be improved versus what can move to straight to automation. All right, so we talk a lot about automation, and my friends at Tipalti offer many of these solutions that actually result in enhancing the fiscal close as well. But if we think about what are the benefits and what are the types of automation, and some of these we've mentioned already: supplier portals, really having those suppliers log in to a tool to be able to see the status of an invoice, e-procurement, e-invoicing, and one that I really think is a wonderful tool or a wonderful example of automation is PO to invoice conversion, where certainly the supplier creates the invoice online using the PO, and it's pretty much heading towards a touchless process. Now, if you're not ready for full automation, you can look at document management, having those invoices scanned and data capture, like the example I gave you, where they were scanning invoices, but they were still, maintaining them in a separate file room just in case they needed them. Automated matching, and we know three-way match is always a challenge with any accounts payable process, but automating that matching is certainly a way to help the process as well as prevent duplicates. Automated workflow approvals, avoid having those invoices captured manually, and take a look at how you can actually approve them with a systematic approach. E-payment, system access verification tools, and we talked about segregation of duties and how you can actually control that with system access tools that can help you identify any conflicts. And of course, we mentioned moving some of these controls we mentioned into a self-audit tool, and we can actually give you an example of that. So what we're talking about is improved AP cost controls and compliance, and really looking at how these automation solutions can support not only AP, but the P2P process. And we'll get into a little bit more detail for each one. And with supplier portals, we know that suppliers can actually use this portal to determine the status of an invoice, but it can actually be used for a supplier vetting and onboarding process. And what you do is have a supplier log in, supply all the information and documentation, and you'll avoid the risk of having an employee pose as a supplier. E-procurement, the REC and PO are created electronically, removing any risk of error that you'd see in a manual data process. And you can actually, in some cases, have direct integration with your ERP system, and it also supports three-way matching and reduces the risk of any clearing account issues and reconciliation that you may find. E-invoicing, and needless to say, this reduces the risk of not only duplicate, but paying an incorrect amount and paying an invoice to an incorrect supplier. This, of course, removes financial exposure and the need for accruals, since invoices are certainly paid more accurately in a timely manner. PO to invoice conversion is one that we mentioned. This can actually help you speed up the approval time and certainly improve working capital management, since there are a few more opportunities for early payment discount. And we talked about the document management, invoice scan, and data capture a little bit, but this automation solution reduces the risk of fraud, and you can actually use it to build in segregation of duties controls. Okay, the next couple with automated matching, and there are some tools out there that actually perform automated matching without the risk of error and improper matches, and automated workflow approvals. This can actually be linked to your employee master file using a delegation of authority policy, and which approvals are automatically updated when an approver moves to another department or is promoted. So the foundation for this is setting up your delegation of authority process to not use particularly a manual table, but actually use your employee master to set up those approvals so that if one amount is exceeded, it automatically moves to the next level from director to VP to CFO like yourselves. E-payment. E-payment reduces check fraud, which is still a big problem that we see out there, check reconciliation issues, and then escheatment process challenges. And we also consider using the P card as an electronic payment. If you're paying a supplier with a P card, you also get significant rebates back. The last two is system access verification. This is where you would avoid those delegation or segregation of duties issues and make sure that the individual can't set up a supplier and the supplier master, pay that supplier, avoid the transaction, and certainly cover their tracks. Self-audit tools, and this one is where we can actually audit the accounts payable process. You can take a look at using these types of tools for finding a duplicate payment before your payment run, or actually going back and running a duplicate payment process as part of your self-assessment. So some of the key controls for P2P include procurement, supplier master, goods receipt, invoice processing, payment, and accounting. And we're not going to go into a lot of detail on those today, but there are some specific internal control standards that apply to each one of these areas. This gives you a look on how an AP self-audit tool works. And it starts with identifying the duplicate, getting payment and historical data from your accounts payable process, identifying the duplicate, running duplicate reports, actually looking at claims to a supplier, and running workflow reports. And the tool would actually find 9 different types of duplicates, payments to wrong vendor, similar invoice, altered invoice date, altered invoice number, altered invoice and PO number, altered invoice amount, exact amounts on same date, exact amounts for same vendor, same invoice across vendors. And again, what this type of automation or tool can do for you is prevent any duplicate or erroneous payments, and it actually can be used to help perform a self-audit of your AP process. Okay, we have our last polling question. And the last question is, are you actually preventing duplicate payments today, and how are you doing so?
Great, and I just launched that, and we'll give everybody just a couple of seconds. And audience, if you can answer it quickly, I know we have some questions for Chris, and I want to make sure that we get to them because we are coming up on the end of our session. So please answer them quickly, and we'll get to the questions as soon as Chris is finished. A couple more seconds. Okay, we're going to close this poll and share with you. So how are you preventing duplicate payments? 34% said using the capabilities of our ERP system. 7% says using a third-party software tool. 44% by manual review. 7% through our self-assessment process. And 8% don't have a process in place to prevent duplicate payments.
Okay, again, thank you. It looks like we've got a lot of people using a manual process, and hopefully the information today will help you. And in the interest of time, we'll go through this case study very quickly. And the caution is, if you have implemented a new system and you've given people super user authority to actually test the system, take a look at that and make sure that when the system is implemented that they still aren't able to do some of the things and utilize their superpowers. And what happened in this case at actually one of my prior companies, we looked at using a team to implement a new system, and we didn't take away the system access. A former AP manager found that she still had the superpowers and actually embezzled nearly $300,000 in company funds, resulting in, of course, a termination and paying back the funds. And then what we did was implemented system rights, system access reviews, and an ongoing self-assessment. And this is basically how you can automate that process from a good system access review and alleviate that process from happening. Okay, and I'll turn it over to Derek.
Thanks, Chris. And thank you everybody for attending. You know, one of the unique aspects of what we try and promote is to develop a holistic closed loop system so that the fraud and duplications don't creep in. And, you know, a lot of companies will alternatively employ point solutions. They'll put in an OCR for their invoicing. They'll have audit tools. They'll have document management, and they'll try and dangle all of these off of an ERP or accounting package. But that really doesn't solve a lot of the handoff issues between these systems. What's unique about Tipalti is that it is an entire system that's fully auditable, and where you can invite suppliers to apply to the supplier portal. They can provide their invoicing, they can onboard themselves, supply their tax information, and all of this comes with multiple levels of approval, both at the invoice level as well as payment processing. So for the suppliers, they really have a very safe way to get their information, including their banking information, tax information, into the system. And they have an AI that detects for fraud, duplicate addresses, duplicate bank data, tax IDs, and those heuristics inform the system so that nobody you don't want to pay or nobody who's trying to defraud the system can actually get in and get paid. So they would get flagged. We're collecting the tax IDs and validating them against the IRS. And so that's a key component to getting the supplier master data more robust, in a more robust form. And then on top of that, you know, we have the invoicing capability around invoices are brought in, they're emailed in, or they're uploaded, and that immediately gets scanned into the system. AI routes, codes it in, routes the proper line items to the various departments, and then sets up the actual approval process. So it learns as it goes along who needs to approve certain invoices based on who the vendor is, and what the items are, and what the amounts are. It'll actually also detect currency, and that brings us to, before I jump into there, that we actually have a PO process as well, so that you can do PO and two-way and three-way matching for those invoices. But then you know, a lot of systems will just stop there, and they cut it off at the invoice process, and that's not enough for us. We actually started off as a payment processing platform, and so the whole payment approval process we actually do within the system, whether it's ACH, wire, SEPA, check, PayPal, whatever it is. You don't have to have a separate bank login to get these suppliers paid. So you can say goodbye to those bank fobs that you carry around. We actually provide payments out to 190 countries over 120 currencies. And because we control the payments, we can actually bring the reconciliation back into the ERP as soon as we know about it. So that allows you to close your books faster and really get the information you need about what's going out of the system quicker. Next slide, please. So you know, these are the areas where we're really unique. We've got 26,000 rules for vetting supplier data. Our tax module actually built in conjunction with KPMG's terms. So they outlined what were best practices, and we created it in the software, basically. Full global remittance to those 190 countries, lots of financial controls that are built into the system. And NetNow, which is actually a way for companies to extend payment terms. So if you're looking to go from, say, net 30 to net 60, you need a way to soften the blow to those suppliers. We actually have an early payment process that we can employ. And you know, just to kind of roll it all in, you know, the way things are working now, with so many teams being remote, as well as you have all these separate entities and shared services you might be employing, you're really taking a cloud-based approach to employing best practices around AP. And you know, Tipalti uses this as ourselves. It's not a risk for us. You know, we're no longer just paperless. We're actually officeless. And so the ability for to trust a system like this, we ourselves are a financial company, and so the fact that we use it, the fact that our customers like Twitter and GoDaddy, and if you have kids at home right now, they're probably on Roblox. That's one of our customers. You know, we are highly relied on to execute this kind of technology and to execute accounts payable in this way. So we're excited to answer any questions you might have, but I'll pass it back on to Chris.
Okay, great. Thanks so much for that. And I think we have a couple of minutes. We can take a few questions.
Great. I was hoping that we'd at least get to a couple. So for either of you, I guess, one of the comments, and there's a question here, supplier portals, and again, I'm not sure if Derek hit on this, but supplier portals add a lot of costs to the billing AR process. How do you address this?
I can address that. It's built into our system. It is, we can't function without a supplier portal. It is ingrained. It's part of our kind of garbage in, garbage out philosophy, right? So being able to have a full-blown supplier portal as part of the onboarding process for your suppliers, where you're collecting all the tax information, they're uploading their payment details and their invoices directly into the system. We actually have an additional service on top of that where we can get adoption from your suppliers so that they start using the platform. You know, all that is rolled in because that's really the only way that we can get that information to get those folks payable.
Thank you, Derek. Another question, does Tipalti integrate with QuickBooks Desktop?
We are looking at that. We haven't been asked to do it as much as we have a QuickBooks Online version, but we've worked with some flat file tools, and we'll be introducing some of that, you know, in the coming months.
Great. And then this other one, so Chris, when you were probably halfway through your presentation, you were bringing up some statistics, and one of our audience members asks, where do we find the industry benchmarks for these statistics? So I'm not sure if you're knowing exactly what he's talking about at this time.
Yeah, I think for the industry benchmarks on AP duplicates and other processes, a best bet for you is the Institute of Finance and Management, the IFOM. They would have up-to-date information on pretty much everything throughout the AP and P2P process.
Well, great. And that brings us exactly to the top of the hour. So again, Chris and Derek, I appreciate so much that you've come on and you've shared some really great information with us. Thank you all for joining us today. And I hope you all received some valuable and practicable information from Chris and Derek. And if you'd like to continue today's discussion, I encourage you to reach out to either of them. I'm sure they'll be happy to answer any in-depth questions that you may have. And with that, I'm going to say this concludes this presentation on the blame game. Are duplicate payments fraud's fault or AP processing? Stay safe and stay connected. Thank you.